The first time Jane Street landed on my radar, it wasn't through a headline, it was an email from a recruitment consultant, a non-trading role in their London office. Exciting job, excellent pay, and the perks straight out of a tech unicorn fantasy. In-house chefs, table tennis, on-site gym, even a pool in their breakout room. So what's not to like? Well, the timing. I just locked in a job in a private equity firm, so right place, wrong time. I had to let go. But when their name popped up again last week, not in my inbox, but in my newsfeed, I clicked again. Not for a job this time, but for the story. Because Jane Street, the firm with the obscene returns as the recruiter put it that time, had just been temporarily banned by Indian markets. Over $500 million frozen. Ironically, those high sky returns that made them irresistible once might be exactly what got them into trouble now. India's financial regulator SEBI has accused Jane Street of market manipulation, calling it a sinister scheme. Pretty loaded accusation. The strategy? Buying up Indian bank stocks while at the same time betting against them on the options market. And this wasn't luck, it was a deliberate move to shift one market and profit in the other. That's what they said. Now, let's step back for 2 seconds. If you are new to options, here is how they work. When you buy a stock, you want the price to go up. Buy low, sell high. Simple. But options, they're a little bit different. Think of them like a ticket that supercharges your stock game. So call options, you pay to lock in a buy price. So if the stock goes up, you buy at a lower price. Put options, you pay to lock in a sell price. So if the stock goes down, you sell at a higher price. Now, for every buy, there is a sale. So sellers, they collect your ticket fee. If you win, they have to deliver on what they promise. If you lose, they keep your fee and you miss the game. Options are huge in India. People use them for all sorts of reasons. To hedge, to speculate, to generate income, and allegedly, to get creative. SEBI's case is best explained by what happened on January 17, 2024. They believe Jane Street executed a 2-stage intraday index manipulation strategy. Patch 1, Patch 2. This is how it worked. On that Wednesday morning, Jane Street bought aggressively on bank stocks and futures, driving prices up, including the bank index. And behind the scenes, they were setting up index bets on their option markets, selling calls and buying puts. And in the afternoon, the same stocks got dumped. Prices tumble. Puts exploded in value. Calls toast. Here's the step-by-step playbook. First, buy into stocks and futures, pushing the index up and making the market look strong. Next, sell call options and buy puts, betting the market will fall and locking in great prices. Then dump the stocks and futures, letting the index drop and triggering a crash. Finally, let the options expire, calls are worthless, puts pay off, and profits roll in. Jane Street says this wasn't manipulation. It was index arbitrage, a price mismatch between the options market and the stock market. So the traders stepped in to close in that gap. After all, that's their job, market making one-on-one. According to a leaked memo reported by the FT, the company put out some charts showing the price divergence and how the trades brought in the prices back in line. In their view, they weren't pushing prices to distort the market. They were pushing prices to correct it. And let's be honest, in a fast-moving market, the line between clever arbitrage and covert manipulation can get blurry. As one commentator put it, the difference between legitimate trading and manipulation is often just whether someone sends an email saying, LOL, I sure manipulated that market. So what do you see? A global market maker misunderstood by a local regulator, or a billion-dollar scheme dressed up as an arbitrage? Let me know in the comments, because this battle is far from over. SEBI's made his move, Jane Street prepping his rebuttal, and somewhere between sinister scheme and sleek strategy is a version of the truth we're still trying to pin down. And as someone who got close to get a job there, I'll be watching this closely, not from the trading floor, but from the sides of the screen with you. So when it comes to Jane Street, what do you reckon? What are their options now?